So today I want to talk about how I built up to a $5 million net worth by the age of 33. And it took me about 10 years since I started working. And for those of you who've been following my story, you know I graduated in 2013. So about 10 years ago with $250,000 of student debt. So I went from negative $250,000 and built up a $5 million net worth. If you break down my net worth, 80% of my net worth, so it's about 4 million, is based in real estate, and then I have about $1 million in stocks, 401ks, cash, and other kind of more liquid assets. So if you look at my breakdown, it's about 80% real estate and 20% in terms of like stocks, 401k. That's more liquid. So a lot of people may question like why so much of your net worth in real estate, and kind of my response lately has been because most of my knowledge is in real estate, right? So it kind of makes sense if 80% of my knowledge and time goes into real estate, then it kind of makes sense that 80% of my net worth is built into real estate. Or if it was vice versa, where let's say most of my time and my skills was in stocks, then 80% of my net worth should be in stocks, right? So for me, I don't really know too much about stocks. I tried like day trading like 10 years ago. Didn't do well. I bought some GoPro stock, I remember, and I mean, it cut in half, and I lost like half of my money, which was like maybe $2,000. And then after that, I just realized, all right, just buy big companies that that pays dividends. So I bought like $10,000 worth of Apple stocks, which has done well. I bought back in 2013, and then I even simplify even further now, where I just buy a bunch of index funds on Vanguard that are low cost. So I have I buy three funds predominantly in Vanguard. I buy the total U.S. stock market, so I own the entire U.S. stock market, and I have the international stock market, and I have bonds. And my breakdown is roughly about, I think, 70% in the U.S. stock market, 25% in the international stock market, and 5% in bonds. Right? So that's kind of my breakdown. I dollar cost average that, right? So what I do is every month I will automate, let's say $1,000, and it will break up into those percentages. So 700 will go to the total U.S. stock market, 250 will go to the international stock market, and then maybe $50 will go to the bond market, right? So that's kind of my breakdown. In terms of cash, I try to always hold around $150,000 in cash because I own a lot of real estate, so I want an emergency fund. I did dip into my emergency fund a little bit, so I'm trying to rebuild back up my reserves. So in case something breaks on my apartments, I have the money to cover it. And then in terms of real estate, as I mentioned, I have a $4 million net worth in real estate. And a lot of people ask, well, Steven, do you feel uncomfortable being over leveraged? And I will say initially when I was scaling, I was leveraging because I was putting like 10% down on single family homes. But a lot of these single family homes have built up a lot of appreciation back then or since then. So let me give you an example. So for my first single family home that I bought in 2017 in Livermore, California, I bought for $800,000. I put 10% down. So for simplicity, they just make it, I put $100,000 down and I had a $700,000 loan, right? So I only have $100,000 of equity in the property. But now that same home, fast forward till today, 2024, it's worth about $1.3 million, right? So I bought it for $800,000. It's now worth 1.3. So I made $500,000 in equity. If you include my down payment, I have $600,000 in equity in that deal, right? And then my loan, it's around $700,000 initially. After let's say some pay down, I've owned the property for about 6 years now. So let's just make it simple, and let's just say I paid down $100,000 of my loan, right? Let's just say I paid $100,000 of my loan over that time window. So I went from $700,000 loan to a $600,000 loan, and now it's worth 1.3. So I have $700,000 equity in that deal. So if you break it down, I have $700,000 of equity in the deal, $600,000 in the loan. So my leverage is about 50%, right? So the moral of the story is I started off leveraged, right? I put 10% down, 10% equity, 90% debt, right? But over the next, like from 2017 all the way to today, now I have $700,000 equity and $600,000 in debt, right? So now I'm de-leveraged a bit. So if you look across my whole real estate portfolio, that's where roughly I'm at. I'm roughly about $4 million in equity and about $4 million in equity 8 million sorry, 8 million in debt, half of which is, oh sorry, I'm messing it up. So I'm about 50%, right? It's about 50% is equity, 50% is debt, right? So I'm kind of split down the middle, which is a good level for me. Oh sorry, I was gonna say I have $8 million worth of real estate, 4 million of which is equity, 4 million which is debt. That's what I was trying to say. Sorry for stumbling. I do these live, right? So for me, that's a little bit more comfortable. I know in the beginning, you do have to leverage a little bit as you scale, but then over time, once you build equity, once your real estate simmers and matures, for me, I personally kind of like a 50% equity to debt ratio, and just know that when I buy more real estate, typically my debt goes up, my equity goes down, but then I'll wait for that equity to catch back up, right? Because like let's do my apartment complex, for example. I bought it for $500,000. I put roughly about $100,000 down, and I put in around $300,000 to fix this up. So let's just say I'm all in for $800,000, right? I put $100,000 down, $300,000 in renovation, so I put $400,000 in the deal, right? So about out of 800,000, 400,000 is kind of debt, 400,000 is equity, right? But then after doing the renovation, I was able to double the rents and I doubled the value. So now, let's say the property is worth, let's say 1.3 million as well, right? So I forced about $500,000 of equity in the deal, right? And my loan is only $400,000. So if you go from 1.3 to $400,000 on my loan, I have about $900,000 of equity, right? So keep in mind, out of that $900,000, I put in about 400, and I forced about $500,000, right? So I have now in that deal, out of 1.3 million, 900 is equity, and then 400 is debt. So in this deal, I'm actually have more equity than debt, right? So if I were to buy more real estate, maybe I'll strip some equity out of this deal and use it to buy another deal, right? So that's kind of how I break down. So roughly, to kind of summarize, sorry for the confusion, I'm about 50% equity, 50% debt at this point, and I've been doing real estate since 2017, right? In the beginning, I was more leveraged. I was putting 10% down, right? So I was probably 10% equity, 90% debt, but over time, right, over the past 7 years, now I'm about 50% equity, 50% debt. So that's a comfortable level for me right now, and now I kind of want to try to maintain this, and I'm trying to build up my cash reserves a little bit as well. So to kind of summarize, my net worth is about 5 million. About 80% of that is in real estate, 20% is in stocks, and because I have more knowledge about real estate, which makes sense, right? So if you have more knowledge about real estate, then 80% of your network can be real estate. If you have more knowledge in business, then 80% of your net worth can be in business, right? If you have more knowledge about stocks, then 80% of your net worth is in stocks. Whatever your knowledge base is, should be your asset allocation, right? Like I said, for me, I don't know much about stocks, so for 20% of my net worth, I just do stocks to diversify a little bit and to take some money off the table, and it's more liquid, right? And it's great for emergency fund, and I don't want to all be in real estate. So that's kind of my breakdown. I can do a deeper dive into how I paid off my $250,000 student debt. I probably have a video coming out about that. And you all know my story about how I scaled in real estate. But just know that these things take time, and that you have to think long term. And despite going from $250,000 of student debt of net worth to $5 million net worth, throughout the whole process, I've been working a full-time W-2, right? So I just didn't buy one piece of real estate and then quit, or pay off my student loans and quit. I just continue to work. I continue to build wealth, and I continue to do this over a long period of time, right? And I get it. If you're younger, let's say you're 20, you're hearing this, and me telling you to wait 10 years is like half your life. That may seem forever, but trust me, time will fly. And if you're able to juggle a full-time W-2 while building a real estate portfolio, while buying stocks, the moment you don't have a W-2, it becomes even easier and easier, right? So I'm actually playing on hard mode right now. So hopefully you got some insights of what it's like to go from a negative $250,000 net worth to building a $5 million net worth, and why I kind of broke down my asset allocation of my net worth as I did, and give you some insights as to why I have mostly real estate. And in my real estate, initially I was leveraged, but then now As I built appreciation, as I forced appreciation, I'm more about 50% equity and 50% debt. So let me know if you have any comments or questions down below, and I hope to see you in the next one. Thank you so much.